Good afternoon, traders and investors. Happy Friday to everybody. Hope you guys had a great day today. I definitely did. It's always good. It's the weekend. So, as usual, we're going to bring you guys the daily market recap, run down through the indexes, run down through a big of our tech names that we've been looking at, and as well, stick through the end, guys, if you want to see my trades that I was able to make today into next week. As I said, next week we're going to go a bit light, but I did load up a few hedge positions leading into next week if in case our thesis of weekly consolidation does play out. So let's get into it right now. So SPY, as we can see, SPY still grinding the 12 EMA. Now we did drop a little bit on the morning, recovered a bit, early morning, and then kind of did nothing. Pretty much all rest of the day, we really didn't do much. But as we can see, guys, we are making our series here of lower highs and lower lows. So we are in a confirmed hourly downtrend at this point. It looks better on the 4-hour, confirmed 4-hour downtrend. It's really still stuck in this range though. We've been back and forth here for the better part of the last 2 weeks, still struggling with our ranges up here, right? This big area of range up here, right above the, 415, 416-ish, all the way to about 420. 420, happy 420 to all you guys yesterday that celebrated. And so what we're going to be looking for, guys, still at this point, we are still looking for potential weekly consolidation. As you can see, we ended the week, a red candle, first red candle in about 5-6 weeks now at this point. We may be expecting to roll over down here into this 12 EMA area if that does play out. Don't forget, next week we have a lot of big catalysts. We have 4 of the major tech names reporting. We have Google, Microsoft, Amazon, and Meta. Apple is kind of all on its own the week after, but 4 of them next week, massive, Tuesday through Thursday. And then on Wednesday, we have Papa Powell coming in, and he's going to let us know whether the Fed's pausing, whether they're going to do another 25 basis points, or, we might get some information potentially on if they're going to keep the scheme of rate increases up or if they plan to go down. So very big week, guys. If you're playing options, there's going to be a lot of volatility considering the fact that the VIX is still at our lower levels here, guys. Very low levels for the VIX right now. Lowest levels in pretty much over a year and a half at this point almost. And you kind of have to wonder if next week is the week where we get a slight pop back up on the VIX, which would come in line with our weekly consolidation here on the SPY and on the NASDAQ. Everything would kind of be in line. Now, could that all, could the VIX go lower and we get positive earnings across the board, positive guidance, and Wall Street reacts positively to whatever Powell comes out and does and says, and we smash through these resistances? Absolutely. But don't forget, trading is a game of probabilities. And in my case right here, I do favor the probability that the bears may have their turn lining up here. With the volatility that's going to get brought into next week, it really would not surprise me. Obviously, anything's possible. That's why I have a long-term account shares that I'm not selling. But on the trading account, we are putting on some hedges just because we have good probabilities line up that weekly consolidation may be underway. So keep an eye out for that on SPY. Still haven't really lost the daily uptrend, but we have taken back a lot of this upside move here. As you can see, we're still grinding the 12 EMA. I mean, this chart still looks bullish. However, we are in a 4-hour downtrend. You can call this a daily bull flag, which it kind of is, but we need to reverse the lower time frame first, guys. And let's not forget, we are trading under our short-term moving averages, the 12 and the 26. So it remains to be seen what's going to happen. It all relies on earnings. Earnings is going to make or break this range. NASDAQ pretty much caught in the exact same situation. The NASDAQ, look at this, guys. I mean, this is the most tight range pretty much that we've had. I mean, you could argue that we've had somewhat of a range over here, right? This was pretty much mid-November through mid-December, a 1-month wide range. But look how tight this is. So tight. The market is just waiting for those earnings results and waiting to see whether the Fed pivot is actually here. So we get all of that next week. So in my experience, guys, you can make a lot of money on these weeks. This is true, but you can also lose a lot of money. And the last thing you want to do, especially if there's a bearish lean into it, the last thing you want to be doing is loading up positions up here. Because at this point, it's all about risk reward, right? I would rather wait and see it play out to the upside or to the downside, right? Because if we go up, then I can always wait for a pullback and a retest and buy it potentially maybe still at these same levels, but at least have the confirmation. You'd have the bullish confirmation at that point. Or if we pull back into weekly consolidations towards a 12,500 here on the futures in this little support range area right here against our moving averages, then it allows you for a better bullish entry and allows you to wait for the weekly higher low to potentially be confirmed. So, you know, no trades is also a trade, guys. Don't feel like you always have to trade. That's a big, big, big mistake that a lot of people make. So if you're unsure of the outcome, and if you're really unsure of the outcome, right, maybe it's best to sit on the sidelines to wait for either the bullish confirmation of the upside or the bearish weekly consolidation, set a higher low than this guy down here, and that way you have your confirmation either of the way, right? At least you'll be in a more certain position, and all those catalysts at that point will be behind you. You have more information. Don't feel like you're losing something. This market, you know, anything's possible, of course, but in my opinion, very, very slim chance that the market next week just goes boom, way up to all, like, you know what I mean? It can't move that fast, right? So no harm done in waiting. So that's pretty much it for the NASDAQ. Same thing, right? We're following our series of lower highs here, guys. Series of lower low on the 4-hour time frame. So the 4-hour time frame at this point is the one that I'm looking out for the most. The daily's kind of in a range, but we're really looking out for this. You know, if bulls want it, they're going to have to reverse this time frame first, and then it'll kind of shape up on the daily. But as I said, make it or break it week next week, earnings and the FOMC. Nothing's going to happen until that happens, pretty much. IWM Russell, same exact thing, right? So tight. Kind of reminds us of back here, back in December, right? Extremely tight. You see, trending, dump, you know what I mean? But this is just messy, just absolutely messy, right? Bulls are trying to set the daily higher lows and whatnot, but we can't push above. It needs the catalyst, and that's why I keep repeating myself, right? On IWM, we're looking for this lower range area to write things in, right? Looking for this lower range area right here to be able to write certain positions in. So I'll be looking, if we do get some bearish volume next week and some bearish catalysts, well, it might just pull down into our target range to where we can start potentially writing puts in this area. This is my favored area to write puts on the Russell for. So I'll be looking out for this in a big way. Obviously, guys, if it shoots up, then perfect. I'll be waiting for a further pullback, right? Something like, oops, let me get my paintbrush. Where's the paintbrush? If we get something like this, shoot up to the 200 weekly, 200 daily moving average, come back and sit down on this support, that will be perfect. Then I can reevaluate, and then you potentially want to be writing some puts under these lows instead of this range, right? So pending information, not going to do much. So take a look inside our S&P 500. So technology, obviously, I showed you guys the NASDAQ, right? Flat, doing absolutely nothing. What about financials? Now, financials is very interesting, right? We've created so much space for a potential pullback. So anything pretty much over 3160-ish at this point will be our daily higher low. As you can see, we are pulling back into that. Next week, depending how it goes, could go either way. This is either gonna be our bull flag, and we're gonna start moving up higher into these levels, or we're gonna pull back a bit more. And on the weekly time frame, look, on the daily, it looks kind of like you're giving up a lot, right? But look at the weekly. There's so much space for our weekly higher low, so much space. And we do have the support of our 200 moving average, 200 week moving average, guys, at this point on financials. So a lot of space, some good areas of support that we can come back down into. And if we are going to potentially come back here, well, the area that I really want to be looking for short puts on, to be writing options in, is right down here. Really right down there, guys. It's going to be a great area that I'll be targeting for XLF. What about XLV? XLV, kind of the same, but not really. XLV is very strong because it's a defensive sector. In recessions, it tends to fare very well. As I'll say it again, this move was largely taken back on bulls by this huge V-shaped move right here, right? Created a lot of space. So if we do next week, if the whole market gets brought down as a whole, we may just see something like this, right? A lot of space to set that weekly higher low before potential for resume the further upside. But the last thing I want to do is buy something off of speculation up here, speculation of continuation, right? If I'm looking for trades, if we don't flush, let's say, If we do make higher highs, well, then it's easy. On a pullback, I can target this area to start writing puts under on a few healthcare companies, right? Namely, the ones I'm looking for, if that does happen, because you always look at the index first. Johnson & Johnson has some decent areas. ABT, Abbott Labs, right? Abbott Labs has come up quite a bit, but they do have a gap fill down here to do it. And let's see, guys, look at this on the weekly, right? Beautiful, beautiful, beautiful setup on the weekly. Almost never trades below its 200 weekly moving average. We just got rejected off of here, closing up below it, closing above it now. And look at this bullish continuation. So this could be a very good double bottom reversal trade right here. If it does pull back further, I wouldn't be opposed to taking a position in the lower 100 areas on this. We also have Charles River. Charles River, same situation. Guys, these are all extremely, extremely good companies, right? Not showing you guys any, per se, garbage companies, right? Still trading under its 200 week moving average, right? And look at the price to earnings, 20. Below the S&P 500, I only show you guys companies that are having good margins, growing revenue. Didn't show you for CRL, but if you want to go back for me to prove it to you, look, I only choose companies that are doing very, very, very good, right? So ABT, if we come back, Abbott Labs, right? I only choose companies that have strong revenue. Well, this is quarterly. I should have shown you guys on the annual. So on an annual basis, right? They are growing very, very solid margins. I love to see 15% margins, guys. I absolutely love it. So these are some of the healthcare companies. UNH, also a very, very large component. Look at this, guys. Growing revenues. Their margins aren't so good. We are, but we're not as extended to the downside on the other plays, right? So UNH, I'll be targeting this lower support area, but still, this play, in my opinion, isn't as solid. It still has room to the downside to move. Not as solid as our ABT on CRL, so keep that in mind, right? So I like showing you guys the indexes, but a lot of people just show you the indexes, and they don't say what the plays in the indexes are to be. So that's what I hope to bring to you guys. I hope to show you some of the major names that I'm playing as well. So that's it pretty much for the indexes. Moving on to our big tech names. Now, I will be showing you guys at the same time I run through these how I'm playing this, right? So Apple, because Apple is now struggling at this supply area, right? So I do the supply and the demand zone down here. So here we have a big supply zone, right? When we try to break up into here, we have some big sellers sitting up there waiting to sell price down. And we also have a downward trending trend line on the weekly. So I'm targeting off of that. So when I saw yesterday's day kind of close weak, and today when we kind of moved back up and the indexes weren't doing too hot, remember we were setting the lower highs on the indexes, right? So what we did on Apple today is we did a put debit spread for June 16th. Why June 16th? So that theta decay, so the option doesn't decay too fast in our face. And so we're making the move on share price, and we're not targeting an option to lose its value quickly, right? We want it to maintain its relative value. So that way, if the price does move down fairly aggressively, potentially over the next 2 weeks, well, at least we're going to be making a lot of money on this option. And how I structured this, right, is I didn't do just a straight put. So we bought the 165 puts for $6.14 per contract, but I also capped it. So I sold the 150s, which is conveniently, this is why I picked them, at our 200-day moving average. On the weekly, 150 is this big, big, big support area down here, right? Big, big, big support area on the weekly. I've been talking about it now on a few videos. If weekly consolidation does happen, this is the next area of support. And that's why I chose a short, pretty much, on Apple. Didn't go for the shares because I wanted to do the puts. Especially with VIX so low, right? VIX is 17. So the implied volatility on these options are low, 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 low. So if we get a spike on the VIX, then these premiums are going to go through the roof, especially if share prices are dropping at the same time. So my expected return is about 2.5 to 3x on these options if price does come down into the 150 areas. And the risk, what am I risking? Well, very, very simply, guys. We don't want to see a close above 170. If I see a close above 170, a hard green close, then obviously we may take profits on the options. This could happen if we have very, very bullish earnings next week, even though Apple doesn't report next week. If the other guys do, and we get some bullish continuation and Apple gets pulled into there, I may just close and reset. I'm going to wait for these RSIs to get a bit more overbought. But as you can see, RSIs on the higher end of things. The bulls are still holding 12 EMA. But as you can see, today's daily candle close wasn't that hot. And now we've kind of reversed the 4-hour time frame. So we may be starting a 4-hour downtrend. So that's kind of what I'm betting on here, guys. That's kind of what I'm betting on. That's why we opened the position in that way that we did today. And as you can see, when you buy a put and then sell another put lower against it for the same expiration, you call it a put debit spread because you're paying for the position still. And it was able to cost me less. The reason why I did that is so it cost me less than 614. It lowers my break even, right? So it lowers my break even from the 165. Now it only has to go before expiration, which is in 2 months. I have to get 161 or better. But if this drops off quick here in the next 2 weeks, we'll be able to capture a good amount of profit. So that's pretty much it for Apple. I like Apple the most for this because at their current price, they're pricing in a lot of the gains for the year, guys. A lot of the price gains for the year, right? So if you look at the 1-year price target, 171, we're like right there. So we've already done most of the move that analysts were expecting for the full year. Obviously, if they have good earnings and whatnot, guidance is priced in. But if they blow our expectations away, which I'm not really expecting, they did let us know that 40% of their PC sales were down. May not be surprising if their other divisions are the same, right? So they've already priced in so much. And look at this rally. This is like a, off the bottom, right? And started Jan, I think it's like a 35% rally, something like that. Almost 35%, guys. So this is why I chose Apple for the play that I'm looking to use as a hedge. I'm not saying Apple's a bad company. No. We're just trying to hedge our bets for the week, right? We're trying to play off that weekly continuation to the downside, our consolidation play. Looking at Amazon. Amazon today, right? Amazon today was one of the best plays of the entire day. Right? So they gapped up today and held most of their gains for the entire day. Look at this. I mean, they hit the 107. We haven't hit this price, guys, since pretty much February. So one of the stronger names today on the markets, and they were able to bring price right up here. It's the pre-earnings run-up, pretty much. Earnings next Thursday. I'm kind of cautious, right? We did reject off our 200-day moving average right here. I'm kind of getting cautious, right? 4-hour RSI is getting a little warm. 1-hour RSI as well. So this is the pre-earnings run-up, right? So as I said, our targets for the actual earnings, right, are right around here. We're looking between 115, potentially 120 up here. If we get some really bullish results, wouldn't be opposed to seeing this and then come down. But that's, I'm not going to take the trade here. I'd rather wait, see it come down, and then I can be like, okay, if we're trying to set the weekly higher lows here, set the stops under there, and that's the trade, right? I don't like playing the straight breakout trades when we're coming into resistance area, especially into earnings. But Amazon, very, very good day. Bulls are in control of the daily time frame. Now, Google. Google is doing exactly what we said in the last few videos, right, guys? So Google, unfortunately, not really able to break this range. It's going to be relying on earnings next Tuesday, as I said. The expected play here is either we're going to smash through this resistance area, right? Smash through this resistance, or we're going to pull down into my optimal area green box. Optimal area green box. If I see we're really above these moving averages here, guys. If I see Google pull down into here, I'm going to be writing some puts in this area right here, potentially the high 90s, right? So 95, 96, 97, if I can get it. That's when I think that this stock's valuation is very, very good. And I would not mind being assigned puts if ever that happens. So yes, it's true. There isn't a direct support area here, but it's an area that I like the valuation. You'd obviously like it to hold the $100, but we'll see. If we get some bad earnings, let's say if we get some earnings and it somehow gaps down here, well, then it's easy. Then you can get some nice puts in the 93 area and stuff like that, which coincides with our lower support zones. So that's kind of what I'm looking out for on a gap down potential off of earnings. Obviously, if it gaps up, if it goes through, then you're looking for it to come sit down somewhere here off of previous support, and I'll be looking to write puts here off of this more recent support area there. So that's what's going to happen pretty much with Google. Microsoft chilling at the highs. This kind of looks like the QQQs, right? So Microsoft has run pretty decently since our January bottoms, also up about 35%. But as you can see, guys, we're not as close to all-time highs as Apple, right? We are struggling with this resistance up here, but that's why I chose Apple to do the short hedge play over Microsoft. It's because yes, Microsoft does have resistance over here, but it'd be less, they haven't priced in all of their move, as a matter of fact, right? 297. So 297, we still have a decent ways to go up here. We're a bit further, right, for our expected 1 year price target for Microsoft. And but we are kind of extended, right? So the chart does look a bit extended. It is starting a rough 4-hour downtrend at this point, kind of like the rest of the indexes, right? Microsoft as well. Earnings next Tuesday, right? So what's going to happen, guys? Only two likely scenarios. We're going to pop up above, potentially come down. Don't get me wrong, guys. We can also do nothing like Netflix, right? But if we're looking for the break of the range, we either have to do this. Potentially, I want to see come back and sit down on it. If we sit down on the support, then I can target this area to be writing some options in. Or conversely, obviously, if we break down here into weekly consolidation, well, the weekly consolidation, I'm going to be looking for our moving averages right down here in the mid 270 area. So that's pretty much it for Microsoft. All relying on earnings, not really touching it up here. Do not have a play on Microsoft going into the earnings. And that's why their earnings are next week and Apple's are in 2 weeks. That's another one of the reasons why I chose Apple. One of the last stocks that I wanted to check up on is Tesla. Tesla. I did a video on Tesla yesterday. So as a matter of fact, right, we have two gaps to fill. We have a gap down here and we have a gap here now, right? So we're kind of caught. So which one will it fill first? Well, let's go to one time frame at a time, shall we? So 4-hour, deeply oversold here. We can see the MACD. It wants to kind of come up, guys. But after such a large drop, and now the fact that we're in a monthly downtrend, we're still now in a confirmed, unfortunately, since we cracked these lows, we're now in a confirmed weekly downtrend, no longer in our range. Weekly confirmed downtrend, not by a lot, but it did do it, right? And we are also in obviously a daily downtrend at this point too. So considering the fact that we're in a daily downtrend, we have to go with the expected scenario. So my most expected scenario, if we do start reversing on this 4-hour, it has to be a lower high compared to this, right? Can it just V-shape and smash it and reset? Of course it's possible, guys. But probabilities wise, when you have such a deep cut, the most probable scenario is trying to come up here, forming a lower high compared to these levels right here, right? And then I'm not saying it has to smash through there. We take it one day at a time. But the next step most likely can be a lower high. Then it could go into an equilibrium. I agree with you guys. It can go into a little equilibrium pattern there right in the middle. It doesn't have to come fill this gap. But if we do something like this and then roll over, maybe because Powell said, the markets come down because of Powell or because the rest of the tech sector drags Tesla down and whatnot, then the next most likely target is filling this gap. So one thing at a time. We may just have a potential little upswing. I don't know how high it's going to get. That's what we have to see, right? You have to go by time frame. Now the bulls, you want to see them hold this hourly uptrend, and we'll see how high they get before they lose it. That's one thing at a time. You check to see how high the bulls on the hourly get. You look at your 4-hour time frame, expecting a higher low somewhere potentially around these moving averages in the 170s. Then you see, do we come down and keep these levels, or do we smash through and continue the daily downtrend, right? And if we continue the daily downtrend, we go for this level. It's the most likely target after that. It's just price action, guys. I'm not bearish Tesla at all. We're just taking it one time frame at a time. I'm a long-term Tesla bull. I have shares. I have no-touch shares in the long-term portfolio. So I want this to go up, but we have to be patient with it. We have to be patient, right? So that's pretty much it for Tesla. Nvidia, as I was saying, guys, I even went for a call credit spread above 280s. I did it yesterday and today. Didn't get much premium, only about 14 cents per contract, which wasn't that much, but today it was absolutely worthless. So I had the 282s and 285s. Today they were absolutely worthless. As you can see, Nvidia kind of struggling here, right? So now we're caught in a top range. We're no longer in this massive trend, right? So this was a 3-month, almost 4-month trend, guys. Now we're stuck in a range. What's going to happen? Look at the weekly. Look at the weekly. Overbought on the RSI. MACD is kind of cooling off a little bit. Big weekly doji reversal candle. You can say, yeah, but Will, we had some of those there and kept pushing. I agree with you. RSI hadn't peaked yet, and MACD was still strong on the upswing. But now the thing is that, you know, here we are a lot higher now. We're coming into these higher ends of towards the all-time highs, right, guys? So we've done a very, very, very large move. Look at that monthly. Very, very large move. It's now been struggling here. The same price for 4 weeks in a row. It lets you know that the bulls are potentially running out of gas. I'm not saying NVIDIA is going to crash, but something like this, right, down to the 250s, going to gain more support. Look at how much space we have, guys. This chart will still be in a weekly uptrend for a while. You know, we can drop for, how much percent can we still drop, right? We can still drop 15% before losing the weekly uptrend. That's so much space, so much space. So I'm not opposed to writing call credit spreads up here. If you want to potentially place a hedge on the market, you have to look for names that are at their highs, at the higher ends of their ranges, right? Won't be opposed to doing some call credit spreads on this for bearish plays, bearish weekly continuation, potentially the downside, right? And that's pretty much it for NVIDIA, guys. NVIDIA, but, you know, I can't lie. We're still daily bullish. Still daily bullish, right? Even the 4 hour, I mean, yeah, like this is kind of a new, you know, it's a range. It's very ugly, right? You can say it's shaping up to be an inverse head and shoulders, which might be true, but probabilities wise, you know, this trade, the call credit spreads up here, betting that they won't crack this in the next few weeks could be a play. It's good risk to reward, right? What are you risking? You're risking a break of 290, right? So you're risking a break of maybe 285 to 290, but for what? For about $40 to the downside potentially, maybe, you know, let's say it's 270 to 275. So you're probably risking $10 to make a potential $30, right? That's 3 to 1. Even let's say $20 to 250, right? It's 2 to 1 risk to reward. So that's why I say it's getting kind of juicy. So that's the last of the tech plays that I really wanted to cover, guys. Semiconductors, the rest of the semiconductors, they are kind of weak. ON, you know, yes, it's towards the lower end of our range, but as I said, guys, I'm really not really touching the short puts until at least Wednesday after the FOMC. I want to see the big tech earnings, how they're starting off. I want to see what Powell has to say because it all relies on the indexes. The only two things only three plays actually that I have on the table is the Apple play I showed you guys. I do have a play now on the S&P 500 that I wasn't going to show you guys at the beginning, but now we're towards the end of the video. So S&P 500, right? What we did, banking off the fact that we may be heading in to weekly consolidation because of this 4 hour confirmed downtrend at this point. Weekly still bullish, I'm not going to lie, but it's tapering off, right? You see how big these legs are? Big push, but you know, this leg is significantly smaller than this leg here, and now we've kind of eaten a lot into this recent move, right? So wouldn't be surprising to see something like this and then potentially roll over, right? So that's kind of what I'm betting on with money, right? So now we have the put debit spread on SPY. So our risk is above this level here. If we get a close above here, we will be closing this position here, but we are targeting the 395 area, right? Targeting the 395, which is roughly about down here. I'll show you guys on the weekly because it makes more sense. It's really right around here, right? Towards the lower end of our moving averages. Not saying it's going to get there, but that's our target. We want to see the pullback. And the reason I did this, guys, is because it offers some really good risk to reward as well. The risk is small, but the reward is pretty decent. This is another 2 to 3x potential play, and we're only risking about 20%. So risking 20% to make 2-3x. That's some really good odds. I'm a big risk reward guy. So what do? We bought the 411s when it was there today at the money, right? So it was a bit more down here. We bought the 411s as it crossed our moving average. I thought it might hold below today, but it didn't. So we bought the 411s. You see it better on SPY. This is the futures, right? So SPY 412. So we bought the 411s when it was right down there, right? So we bought the 411 puts for $5.45. Oh, sorry, guys. These are for May 12th. I should have put it on here, but these are for May 12th. So we bought the 545s $545. We sold the 395 put, right? So we sold the 395, which is our target. Gaps to be filled here, right? Gaps. So the 395 is our target. That's why we sold that contract, to get a bit of premium back, so I don't have to pay 545. I pay 545, then the market makers give me back this for selling, so I'm net cost in this 365, which puts my break even roughly at about 407-ish, 407.50 if you want to call it, because I wrote it a bit over 411. So about 407.50, and all of that is profit thereafter, right? So that's the play that we're making on SPY. So we have the SPY hedge for weekly consolidation to the downside. We have Apple short to the downside pretty much, also with the put debit spread, right? And the other one that I did is SQQQ, right? SQQQ, I was able to time it at a really good level. Where did I time it, guys? This. If you look at this, guys, this is the exact same trend line pretty much, right? So this is just the 3 times inverse of the NASDAQ, right? A lot of people know this trade. So this is where I took this trade on the NASDAQ as it was approaching our trend line resistance, was able to get it right in this area here. Didn't pick the exact top, kind of got a bit before it, around 13,000 and, 3-ish on the futures. So we were able to get a starter position on SQQQ here. Position's currently in profit, but it's a very small position, guys. I only went with a couple hundred shares to begin with because we're not sure what's going to happen, right? So obviously the stops on this position are going to have to come over the highs here. If we do crack these highs and go for new highs, I'll have to close that position, but it doesn't matter. It's just a hedge against my longer term shares that I'm holding through this. I'm not writing any options, guys, at least until next Wednesday. I might, if we have some gap down earnings on big tech on Tuesday, I may be tempted, depending on how much they drop, right? May be tempted, but we'll see at that point. For now, these are the only trades that I've placed on. So we have SQQQ shares, because it's 3 times inverse of the NASDAQ. So if the NASDAQ drops, SQQQ goes up. And since it's 3 times leveraged, it should move pretty quickly, right? So SQQQ, Apple put debit spread from the highs. And then we also have S&P 500, SPY put debit spread from the highs. So those are the 3 plays that I'm keeping into next week. I hope you guys enjoyed the stream. If you learned something, if you appreciate the plays, consider liking the video, consider subscribing. I love you all. Have a great weekend. I will be uploading some more stock specific and strategy specific content this weekend. So tune around for that. I love you. Have a beautiful weekend once again. And I hope you had a great week trading. Peace.